Real estate investment trusts or REITs are still getting beat down like crazy, and this is because interest rates might stay a little bit higher for a little bit longer. Now, according to the Fed rate monitoring tool, where you can see the probability of different interest rate cuts, hikes, or being left alone, at least as of right now, there's a good chance in the March 2024 Fed meeting that rates are most likely going to be left right where they are. But that's not to say that later on this year, we are not going to see lower interest rates, even possibly significantly towards the end of this year. And for this reason, I personally have been loading up on some of the high quality REITs across the markets. Now in this video, we're going to go over what I personally think are the 5 best buy and hold forever REITs that are all on sale as of right now, at least filming this video. Now, if you consider yourself a REIT investor that wants some exposure to some super high quality real estate, stick around, drop a like down below, and let's get into the first REIT. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first real estate investment trust that I'm a huge fan of, and that's one of my biggest holdings across my entire 7-figure portfolio, is ticker symbol or Realty Income. Now, because where Realty Income has been trading as of recently, and because it's been getting so beat up in price, Realty Income is offering almost a 6% starting yield, which historically speaking, there's not been all that many opportunities to get in Realty Income with that high of a starting yield. Not to mention, Realty Income is one of the most diversified, largest REITs across the entire sector. And on top of that, Realty Income is one of the safest dividends across the entire sector. Now, Realty Income's portfolio is also extremely diversified, which makes Realty Income feel almost similar to that of an ETF, because by buying into ticker symbol O, you get so much exposure into so many different areas. Realty Income also has had some decent dividend growth, although it is on the slower end, but you're really not going to complain considering you're getting a starting yield of just under 6%. Now, Realty Income also pays a dividend monthly, has a dividend growth streak of 28 years of consecutive increases, and an uninterrupted dividend streak for 54 years without a reduction. All that to say that if you are currently an investor that wants some exposure to some super high quality real estate, Realty Income could definitely be a REIT to look into. Now, what I mean by this is a lot of times when you buy into a relatively higher starting yield stock, and don't get it twisted, not an ETF, a single stock, you are placing a lot of money in just one basket. But with Realty Income having over 13,250 different commercial properties, with over 1,300 different clients who operate across the world, and with Realty Income being so diversified, this real estate investment trust, Realty Income, is going to allow long-term dividend growth investors to sleep well at night, knowing that most likely this REIT should do just fine no matter what happens in the economy next. The next REIT that I think is a great opportunity as of right now where it's trading, and for me personally is a buy and hold forever REIT, is Triple N REIT, or previously National Retail. Now, National Retail has also lived in my portfolio for quite some time now, and National Retail is currently offering a 5.53% starting yield with where the stock has been trading as of currently. National Retail, very much like Realty Income, also has an extremely safe dividend and also has some dividend growth, although again, it is going to be on the little bit slower end. But once again, no one's complaining at a 5.53% starting yield. That still does grow over time. National Retail also has a really strong history when it comes to paying dividends and raising their dividends over time. 34 years of consecutive increases and 36 years of dividends without a reduction. So for the investors out there looking for another diversified option, Triple N REIT is a great option in my opinion. Now, this is because National Retail is about just as high quality of a REIT that you're really going to find throughout the market. Some stats on Triple N is that it has a 92% occupancy. It's across 49 states. They have 35.8 million square feet. They have around 400 different tenants, 3,511 different properties. And some of their top tenants being very familiar names like 7-Eleven, LA Fitness, things like BJ Wholesale, Wendy's, etc., etc. Now, to be completely honest, I personally do hold a lot more Realty Income in my long-term portfolio than National Retail, and it's just because the quality of the tenants, in my opinion, are a little bit better in Realty Income's overall portfolio. But that being said, National Retail does still have a great list of top tenants. It's still highly diversified, but because some of the top tenants in National Retail's portfolio are what I would call a tiny bit more risky than that of something like ADC or even Realty Income, you are going to get a little bit more value by buying into Triple N. The next REIT that I think could potentially be offering a decent buying opportunity, maybe not the best ever, but a decent one, is the Telecommunication Tower REIT, ticker symbol AMT or American Tower. Now, American Tower does have a bit of a lower starting yield, but keep in mind American Tower is higher beta, and this stock has grown significantly over multiple different periods historically. Now, AMT does have the 3.64% starting yield, which again, historically speaking, is on the higher end, and also has a very safe dividend, just like that of Triple N and Realty Income. Now, here's the difference between AMT versus ticker symbol O or ticker symbol NNN. AMT does have some extremely fast dividend growth, which means that dividend investors that buy into AMT today might be getting a starting yield of around 3.64%. But if they keep raising their dividends like they have historically at least, American Tower investors are going to get paid more and more cash flow over time. Now, American Tower does pay a dividend on a quarterly basis, and as you can see the historical dividend payouts, just over the past few years even, AMT has raised their dividends extremely fast, has 10 years of consecutive increases and 10 years without a reduction. All that to say that AMT most likely is going to whipsaw the portfolio around a lot more than that of NNN or ticker symbol O. But if you consider yourself a REIT investor that wants some exposure to one of the biggest, if not the biggest, telecommunication tower REITs across the entire world, American Tower is definitely one to look into. The next REIT that could be offering a great buying opportunity right now and is a buy and hold forever in my portfolio currently is ADC or Agree Realty. Now, Agree Realty, similar to NNN and ticker symbol O Realty Income, has a very diversified, high-quality basket of different properties within their portfolio that really any real estate investor would love to have exposure to. And as of currently, with where Agree Realty is trading, it's offering a 5.1% starting yield, which again, historically speaking, off the 5-year average is much higher than normal. Now, Agree Realty does have a 70 on the safety score for the dividend safety, and generally speaking, the consensus is when it comes to Agree Realty that the dividend is relatively safe. Now, Agree Realty doesn't have the biggest starting yield and doesn't have the biggest dividend growth, but Agree Realty has been growing their dividends for 10 years straight and has been paying a dividend now for around 11 years. Now, the last and final REIT that I would consider a buy and hold forever position, which is in my portfolio currently, is EXR or Extra Space Storage. Now, I first bought shares of EXR a while back because I wanted some exposure to self-storage facilities, and EXR, Extra Space Storage, is one of the largest, if not the largest, storage space facilities across the entire world. Now, with where EXR is trading as of currently, it is much higher than the average yield that it normally offers at a 4.58%. And side note, I bought my first shares of EXR much more expensive than it's trading at as of currently. EXR also has a super safe dividend, is a little bit higher beta just like AMT, so this one is going to move around a little bit more. So if you are more of a low beta investor, just keep that in mind. Now, EXR does have some extremely fast dividend growth, or at least it has historically. You can see that the dividend has grown 22% per year, and this is over the last 10 years. Now, because EXR is beat down in price, pays such a decent starting dividend yield, and has had significant dividend growth historically, I think it could be a potentially good option for an investor that wants some exposure to self-storage. So there we have it, guys. Those are 5 different real estate investment trusts that I think are potentially offering a great buying opportunity as of right now with where REITs are still trading at. Now, only time is going to tell on if or if not interest rates are going to be cut significantly this year, left alone, or whatever else the case might be. But regardless where REITs are trading as of right now, I still think there are some good opportunities if you dig a little bit deep and stick with some of the high quality names across the markets. But with that, I want to hear from you guys down below. Out of all 5 of the real estate investment trusts, the REITs that we went through in this video, which one is your number 1 favorite and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.